Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 13th, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. Stocks closed at yet another record high, and I think more upside is very likely. There is broad participation because small caps are also hitting new records. And I'll show you an example of when trading on fundamental analysis or news produces poor results. We got a couple of few trade examples, how to trade breakouts. So here's one for General Motors, and then we will also look at a couple of stocks with what I call a tight trading range, Titan International and Atara Biotherapeutics. Then we'll go look at junk bonds, and then eventually at the 30-year Treasury bond yield. Perhaps Bill Ackman is correct. We'll see. And then we'll look at Forex, US dollar. It could be, there's a chance it might be bottoming. And we'll look at USDJPY, the Japanese yen, and also at gold. Bitcoin is hitting new 52-week highs. It is definitely overbought, but it could continue higher still. And Ethereum again pushes towards 52-week highs. So here, this is S&P 500. And on this chart, I marked the W looking pattern, or you can also say that it's a cup and handle. I don't normally trade off of the chart patterns. I trade exclusively off of my lines, and you can see these lines on this chart, the green, blue, red, and yellow lines. So they're called Master Charts Trading price action indicators. They're calculated by a mathematical formula, and you can have them on your chart as well. So all you need to do is sign up at Master Charts Trading. You can also go to everyonecantrade.com and sign up, and I can open the door for you, and you can have the same charts, same lines on your chart. So looking at this chart, if we go back a little bit to March, excuse me, to March of this year, and February, March, April. So we had a collapse here. Then they started basically printing money, passing all kinds of bailouts. The stock market reacted very favorably, and we had a breakout. So this breakout, why do I think it's a breakout? It's because it simply closed above my support and resistance lines. So this horizontal lines, they represent a support and support resistance concepts. Without revealing the formula, I can tell you that they work really well, and you can kind of clearly see it on this chart. Back here in March, April, people were saying that we're going to collapse and we're going to continue lower. I thought the same thing, but then, I decided not to short right there on the 27th of March, mainly because of the way junk bonds acted, and I'll show you junk bonds in a few minutes, and also just from my general experience and general knowledge of the stock market, it's not very easy to short, and also there is a tendency of stocks to go up, in other words, a bullish bias. So I decided not to short, and I was absolutely correct. When the breakout occurred a few weeks later in April, we started buying. So currently, we're seeing this W kind of pattern. Some people like to trade on these types of patterns. So we already are seeing a new breakout. We saw a close above the blue, into the new records, and also we saw a close above previous records here from September. And this is basically already an indication that we're going to see a new significant move higher. So how significant? The depth of this pattern is about 12%, so it is reasonable to expect something of the same nature in the future. So we're looking at around 4,000 for S&P 500. QQQ, the Nasdaq is underperforming slightly. The general stock market hasn't yet broken out to new records. It means very little because before it was outperforming. It had a 40-some% rise. Again, we're trading it as well. So back in April, we saw an opportunity, we bought it, and just enjoy the ride. Right now, we're seeing something similar. Maybe this is a cup and handle, and then we can see another move higher, like I just showed you for S&P. The small caps broke out to new all-time record highs. And this is extremely good news. If you're a fundamental analyst, I'm not. But just looking from a fundamental perspective, this is 2,000 small cap stocks. And overall, they're obviously trending higher and they're at record highs. So to me, this is showing broad participation, because we're seeing S&P 500, the large caps, some mid caps, but mostly large caps, and we have the small caps also breaking to new records. So unequivocal bull market, no end in sight. I don't see an end to the bull market yet. There is just not enough evidence to say that. So what we're doing, we're continuing to buy it. These up arrows are actual alerts. And why did I send those alerts here? It's pretty clearly obvious. We saw a close above the blue line. Again, you don't need to know the code. The code is hidden from the users, but you can use the actual lines. So when stock overcomes support resistance, it becomes, in this case, it became quite, obviously bullish, because before here we saw, a push lower. So even you can see this downward facing arrow. Again, I did not, open a short position here for the same reasons as I didn't open for S&P 500. And then eventually in a few weeks, you can see a breakout and new opportunity to buy. The latest one was just perfect. Price was somewhere above the blue line, came down. It literally touched it. Again, these are mathematically calculated. They're not drawn by hand, but you can see it clearly. It touched the blue line, closed above it. That's my signal. Excuse me, I'm still learning this new interface. There's upgrade. It was an upgrade to the operating system. Anyways, so record highs, latest trade, almost 24% gain. Again, if you are trading options, in my experience, it's about 3 times. So 23% times 3 is about 75% move for an option. It's normal. That's how much they move. And we do trade stocks and options for stocks as well at MasterCharts Trading. So right now, I will just wait. If you have a position, hopefully you have a position in small caps, just sit and wait. So here I want to show, this is a chart of United Kingdom, EWU, United Kingdom ETF. And if you can read it, it says United Kingdom economic output shrank by 20% in the second quarter of 2020. Now, if this was some other year, not 2020, and the United Kingdom economic output shrank by 20%, I'm sure you will see a collapse of the stock market. In this case, the reaction was just basically nothing. This was the reaction, a little bit of a downward drift. And now we can see another push higher, and actually it's approaching breakout levels. So if it closes above 28.76 in this case, we can see, this security will become bullish, and I will want to be buying it. So this is just showing that, you're trading on economic indicators, or you're trading on fundamental news, or using fundamental analysis to make trading decisions. I would just highly discourage everybody from doing it. Don't. You will just go crazy. I'm serious. Because there's so many economic news there is literally hundreds of events in the world, thousands of events in the world that are newsworthy. Some are very important, some are somewhat important, some are not terribly important. But in my experience, all of them are useless because you can do the same thing and even better without knowing anything about any economy or economic indicators. So in this case, if you were trading on fundamentals and you knew for some reason that this is going to happen, and you say, "Oh, I'm gonna short it right now," and you shorted it, and maybe you got like 5% gain here. But in this case, it's better to just look at the technical picture. Technical picture right now, it's approaching breakout levels. So if it closes above 28.76, the support resistance line, where you can clearly see it, then that's the information you need. That's all the information you need to make a very difficult decision without, reading economic indicators, listening to people, wearing suit and ties on TV and pretending that they actually know something, or a whole bunch of, people who do, I think they're called registered investment advisors. And, they spend many years studying stuff, fundamental stuff. And I can do the same thing in 30 seconds, probably less. So you can do the same thing in 30 seconds, probably less. And that's why all you need to have is these 4 lines on this chart, and that's all you need, seriously. I traded for many years, started trading in 2012. And this by far so much easier than anything else. So I wanted to give an example of an actual trade. This is an actual breakout trade. So why do I call it a breakout? The breakout, it means that stock was trading near 52-week lows. You can see it was way down here in March. This is General Motors, by the way. And so it was really beaten down, and we did nothing. We just watched it, and then we watched it, and then there's the breakout. It's a close above this blue line. You can see it a few days earlier, 24th of August. Something happened. I don't know what. Maybe it was a management shakeup. Maybe it was economic picture overall improving. Maybe it was some other news that we have no clue about. But the fact of the matter is that's all I needed to do. All the information I needed was right there. I saw a close above the support resistance, and that was my signal. Let's buy it right there. So I sent alert to my subscribers. I haven't bought it myself, but that's 36% gain. Again, if you're trading options, that's probably going to be close to 100% gain. So easy, Don't overthink trading. It's really easy. You need 3 things. You need to have a system. This will give you a system. When to buy, when to take profits, when to avoid, even thinking about getting in, and when to sell, and when to cut your losses and all that. The other thing you'll need is risk control. So how many shares are you gonna buy? Yeah, it looks great. Let's buy a whole bunch of them here, right? But what if it goes against you and it collapses? Then your loss will be very large. You need to have a smart idea of how you're going to control your risk. The easiest way to control your risk is to simply buy an appropriate number of shares. And how do I know what's appropriate? It's easy. So we grab a tool right there called long position. We click where we're gonna buy. And then if you click on the tool, you will see that it appears, this bar appears. If you click on settings, you will see that you can change the account size, you can change the percent risk. So I personally like to keep risk at 1%. In other words, if this position goes against me, then I will only lose 1% of my account. That's provided I will, not freak out and not exit at my predetermined stop. You have to not freak out and go ahead and exit. Cut your losses. So let's pretend we have a $100,000 account. We're going to risk 1%. we're going to put our stop at the yellow line, way down here. Target is about right. It's about where the green line is, basically. So once the target was reached, we will advance our stop like that to the entry. And then, so the target is reached, you advance your stop to entry, you can't lose. So that brings up the third part of a good trading experience and kind of like a trading equation and successful trading. Is the nerves. So the nerves, meaning that you don't freak out, you don't get super happy when stuff goes in your favor, you don't get super upset when things go against you, and you control and because you control your risk, you just don't get super upset or super happy. You will just be normal, if that makes any sense. So three things: system, risk control, and nerves. So nerves kind of come from the risk control. If you have good risk control, you won't even need really nerves. You may get occasionally slightly upset, or occasionally you'll be just boasting to your friends. But you need to watch yourself. If you're gonna start boasting to your friends how you made tons of money, then next time you want to make sure that you still control your risk. All right, and don't blow your account. So a few more examples. This is again an actual alert because I have another newsletter. So I have one newsletter for like general large cap stocks and ETFs, and I have another newsletter for just unknown stocks. I call them speculative stocks because nobody really knows what people would do. I'm sure you can find out what Atara Biotherapeutics does, but that would be like a fundamentals research. And if you want to do that, that's fine. But what I found is that you don't really need to do that. Because look at this chart pattern. Stock was in a 52-week lows. I mean, it was going down for many months, if not years. So the last time it was in an uptrend was in December 2018, where I'm hovering. And since then it was going downhill, downhill, downhill. So what I liked about current setup is that notice how far the lines were back in April from each other. From 20, for example, here I'm going to show you again. The distance between the yellow and the green lines back in April was $20. But recently, in August and just recently, the distance was more than half. It's like $10, $9.59. So you can kind of clearly see it. I'm not making it up. It's very easy to spot what I call a narrowing of a trading range. So the trading range became very narrow, and our stop, if we were to buy it, let's say back in April, the stock decided to go and close above the blue line, our stop would have been still at the yellow line. So that's a significant. That's like $14 stop. But here, when we were buying it recently, our stop was actually quite small. It was like $6. I don't know if you can see it. Yeah, that was $6. So you see the huge difference between, wide trading range and narrow trading range. So I'm looking for these types of opportunities where we have tight trading range. This is for my, another newsletter I have. It's called Speculator Newsletter. You can go check it out on my website later on. The website is same as the indicator name. And I'm looking at this chart. It looks great because the narrow, trading range is very narrow. So we want to buy it before the breakout occurs. Right now, the breakout already occurred, so there's no point buying it right this instant. I mean, if it pulls back, then we may consider buying it again if it pulls back towards the blue line. But right this instant, there's, if you bought here in November or October, I would just possibly take profits and advance my stop to entry, and then eventually if it starts going higher, I would just trail it higher. But yeah, this is the type of stock breakouts we're trading. This is about 37% gain, and you can see it's a very nice move. So it looks like it's going to continue higher. It feels that way. Here's another very similar example. So I'm looking for these types of patterns where the stock was in a long-term downtrend. You can see it was down. It was downtrending for since, again, since 2018, since May 2018. Yeah, it just kept going down. Eventually we got to our modern times, and also you can see how wide the trading range was here in April, how narrow it is right now in September, October, November, and then I went ahead and I sent an alert to my subscribers here on 27th of October, when you had many opportunities to buy around the blue line, and it just took off. So 69% gain. Congratulations if you opened it recently. And this is some firm I have never heard about, TWI, Titan International. Once again, I don't know what they do, and this is the beauty of the technical analysis, is that you can make good money without knowing what the stock does. Now, I am sure you will disagree, especially if you like fundamental analysis, or even worse, if you went to school to learn fundamental analysis. You will say, but look, I went to school, and you're saying that I can do the same thing, in 30 seconds. And what I urge you to do is to try my indicators and check it out. Then you will see if your analysis is better or my analysis is better. But in this case, it's pretty clear, and I like clear things. I don't like, mystery. There's no mystery here. It's straightforward, you see. All right, let's switch gears a little bit. This is junk bonds, also known as high yield bonds. So that's another reason why I did not want to short the general stock market back in April. We had a collapse. Also, junk bonds and stocks, they move together in lockstep. They have a high correlation to one another. So you can see when the stocks collapse, the junk bonds collapse together with them. And then eventually here in 9th of April, you can see that junk bonds gapped from 8th of April into 9th of April right there. Huge gap above the blue line. So that was my signal. Again, I didn't really, I listened to news. I heard the, things like Federal Reserve is going to start doing their thing. There were trillions of dollars in bailouts. But I didn't base my decision to start buying junk bonds on any of that. I only based my decision to buy junk bonds because the support resistance was overcome right there where I'm hovering on 9th of April of this year. And since then, we're just looking for opportunity. So there was an opportunity here on 22nd of May and another beautiful opportunity 29th of May. Look at this. It just came right down to the blue line and we just bought it there. So I actually have a position as well in my retirement portfolio. I sold half of that, but it's okay. So overall, the other thing is the more you sit in the position, usually the better the results. I sometimes have hard time sitting in the position, so I take profits. That's my problem. So that's my nerves. But the system is still there, and I'm respecting my own system, and I'm respecting my own, stops and all that. How you handle your profits, that's a completely different story. In this case, stocks and junk bonds made a nice high here. I think this could be 52-week highs. No, probably not yet, but it's approaching 52-week highs. So junk bonds, they and stocks correlate, they move together. So we should think about junk bonds and stocks as very similar assets. On the other hand, the TLT, the treasuries and the other treasuries, their credit rating is much higher than the junk bonds. The junk bonds are called junk for a good reason. It's because the credit rating of the companies that are rated junk are just that. They're poor credit rating. Now, TLT, Treasury bonds, are bonds of the United States of America. So the credit rating is clearly higher than the junk. For how long, that's a different story. Again, I'm not doing any fundamental analysis here. But looking at this chart, I actually went ahead and I bought myself right there on 10th of September. But now we can see this really not a great looking pattern where the price dropped. I'm going to zoom in a little bit. You can kind of see that the price dropped below the blue line right there on the 5th of October, tried to get above it on the 15th of October and failed. So this is reaffirming resistance. I mean, remember that these lines are support resistance lines, so they can act as resistance. And in this case, it seems to be acting as resistance. Now, here you can see the stop. I still have it at the yellow line, but let me show you why I think the red line for this particular security would be a better fit right this instant, the stop at the red line. So we need to look at TYX, which is a 30-year Treasury bond yield, and they're exactly the opposite. Treasury bonds in this case are moving down, while Treasury yield in this case is moving up. So if you listen to my presentation so far, you will know that a close above the blue line would imply a bullish market. Now, if we go back on this particular security, TYX, the Treasury bond yield, and these numbers are actually the number of percent. So, for example, in this case, it's 2.3%, and that's how many percent that 30-year Treasury bond yields. It's been in a downtrend for a while. Since, at least October of 2018, but more likely from February of 2019. So no question, it was in a downtrend, and then finally now we're approaching this, level of 1.81%. And if it closes above it, then I would say, okay, I think we're seeing a reversal in Treasury yield. By extension, that would be a drop below this red line for TLT. And even though my stop is currently at the yellow line, I will exit because I think that this is more important, the TYX, the Treasury bond yield. So let's watch. I'm really carefully watching this at a level at 1.81. I think if we close above it, we could see a move higher for yields and a move lower for bonds. Okay, let's look at some Forex instruments. So this is DXY, Dollar Currency Index. In a downtrend, clearly, you can see a breakdown on the 2nd of June of this year, and a great opportunity to sell it, to short it right there on the 30th of June. It was a huge gain. Okay, so right now since maybe July, we're just trading more or less sideways. Now, I'm gonna go to 4-hour charts. So the 4-hour chart is, a little bit more volatile, I guess, and it's a little bit, it's significantly more difficult to trade. So on this 4-hour chart, this is the low from the early November, and then we went towards this red line. So here, unequivocally, this is what I would do. I would short it right there on the 11th of November. But I was extremely reluctant to do that because of the way gold was acting. So here's gold, again on the 4-hour chart. But before that, let's go to daily for gold. So gold was in an uptrend for a while. Latest alert from 23rd of March yielded over 32% gain, and it went to all-time highs. Since then, since early August, we can see price of gold kind of trading sideways to somewhat down. What bugged me really badly is this candle from the 9th of November, so from Monday of this week. And I sent this to my subscribers. I called it very large and very red. So this is a very large, very red candle. You know, I don't like those large red candles, especially if I think the stock is in an uptrend. So I went to 4-hour chart. I'm looking at 4-hour chart, and it's even bigger. It's a very large, very red candle right there on the 9th of November at 2 in the morning. And you can kind of see that right this instant. You see how the price came back up to the red line. So I would be shorting it right now. So who is correct? Which one is correct? DXY, dollar index, should we short dollar or should we short gold? And why am I even worried about it? It's because the way gold is traded is XAU USD, so gold divided by US dollar. If US dollar gets weaker, then gold gets stronger, and vice versa. In this case, dollar index seems to be gaining from the lows of November. I mean, right this instant it's kind of moving down, but gold is not really moving up that significantly. So I want to, right now, I just want to kind of wait and, when in doubt, stay out. This is a good way to think about the stock market and just markets in general. When you're kind of not sure what's happening, and I freely admit, sometimes I look at the chart and I'm like, I don't know if I want to just bother with it. There's so many other opportunities. So in this case, this is one of those charts. I'm not sure I want to bother with gold right now because of the way it's acting and the way dollar is acting. It's confusing. So I just want to put it out there that certain situations, it's better to just do nothing and just sit it out, basically. Okay, so another interesting chart is USDJPY. This is a Forex currency pair. You can trade it if you like to trade Forex. Honestly, there's so many stocks out there that trading Forex is like, oh well, why bother? But people enjoy trading Forex, and that's fine with me. So this is a daily chart of USDJPY, US dollar over Japanese yen. So the latest opportunity to sell it was on October 14th. It definitely was successful. You need to, when your target is reached, you need to take profits, advance your stop. And then you would have probably been stopped out, during this, again, huge candle. This is the 9th of November candle. There's the 9th of November candle on gold. So very large and very green. So in other words, in favor of US dollar. If US dollar is gaining and we're at resistance, the red line provides resistance, shouldn't we be shorting it? Last time we did, and it worked really well. But right now, I'm reluctant. So once again, this is me expressing my doubts about the way the dollar index is moving. It's possible that we're seeing the bottom of the dollar for now. So with Forex right this instant, I want to just wait and do nothing. So many other opportunities in stocks, and then, Forex, well, let's just wait, do nothing. Here's Japanese yen, the actual futures of Japanese yen, again, huge red candle. Should we be buying it here? This would be the signal. Today would be the signal on 13th of November. Today, it's a signal to buy Japanese yen. But I don't like this big candle, so I'm going to wait. I don't like this 9th of November candle on it. Yeah, so I'm going to wait. Bitcoin, so huge move on Bitcoin. And again, Bitcoin moves quite a lot. Couple of opportunities way back when in April. Alerts were sent. I opened the position. Unfortunately, I got stopped out. But if you didn't get stopped out, that's 82% gain. Should you be taking profits? Possibly. I mean, it's really steep. This advance is getting very steep. So We will see a pullback. I don't know where it will carry us. So for me, the great opportunity to buy would be at the blue line. It's currently at 11,754, and the current price is 16,000. So we will need to see a significant move down. That's 28% move down before I become interested. But the good news is there are many cryptocurrencies. So if you didn't get into Bitcoin, there's other ones, like Ethereum, for example. Now, I bought myself Ethereum on, and they're available now to buy at regular brokerages. So many of the brokerages, actually have cryptocurrencies as an available asset class. So I went ahead and I bought myself here at 344. This is Ethereum. How did I make a decision to buy it? I definitely did not listen to the news. I did not look at any fundamentals of Ethereum because I don't know what they are. There's just a bunch of numbers and some symbols. There is some blockchain thing that's also happening. Do I care about it? I think you know the answer to that. I don't really care about it. The only thing I really care about is that. Did it close above the blue line? Yes. So I bought it. I waited a few weeks. It went to my target. Target was not that far off. I sold a quarter here and I advanced my stop to entry. So I bought on the 24th of September, but on 12th of October, I advanced my stop and I stopped worrying about this trade. Now it's approaching new records. So I actually sold another quarter because I thought that this is it. We're tapping out. I thought that this candle right there where I'm hovering, 6th of November, was it. And I sold a little bit, and looks like I'm wrong. Looks like it might break out to new records. If it breaks to new records, it has significant potential to run even higher. And I'm cool with that as well because I'm still holding half of the position. And that's fine, with me. Again, I make good money. My profit factor, or how many dollars I win divided by how many dollars I lose, is close to 3. So in other words, I make about $3 for each dollar I lose. That is a very good profit factor. So you can make tons of money with that, especially if you have a large account. If you have a relatively large account, you can make very good money with my system. So Ethereum, Bitcoin seem to be in an uptrend, and we will continue to watch for any opportunities to buy it. All right, so now that you've heard my presentation, head over to everyonecantrade.com, or you can also go to MasterChartsTrading.com. So I have 3 products currently. Trading indicators, well, actually 2 products for that matter. Trading indicators and newsletter, but the part of the newsletter and ultimate bundle are 2 more very cool products that we have designed here at Master Charts Trading. We have an excellent tech guy, and he was able to program a couple of things. Very cool products. So we have a stock screener. In other words, it will find stocks like General Motors, for example. This was from the stock screener. So stock screener gave us this opportunity, and we acted on it. So that's the stock screener. And then the other one is the stock speculator newsletter. So this is what I was showing you a few minutes ago. For example, Atara Biotherapeutics was also found by the scanner, and it became part of the newsletter of the stock speculator newsletter. Actual alert to subscribers. Hopefully they were able to get in. Same goes for this Titan International. Again, I don't know anything about this company, but it was found by a scanner. So 69% gain. Congratulations. And I think the prices are very, very reasonable. At $49, $50, you get a full suite of tools. You get everything you need to make good money. In fact, some people make a living using my indicators. Some people are actually doing it full time or whatever my number of hours per week, trading professionally using my indicators and nothing else. It's that simple and that profitable. So sign up, 30-day free trial. We trade stocks, ETFs, commodities, forex, gold, and then now speculative stocks as well. So I think you will definitely not be bored. And also we have now a PayPal option as well. All right, so sign up and I'll talk to you later. Thanks for watching. Bye-bye.